It's AI tech stocks earnings D-Day today with several target stocks reporting, including Meta, Microsoft, ASML, Tesla, IBM and LRCX that I've covered in my most recent in-depth article. So Meta trading at 673. EGFs, they weakened, it's 7%. Yeah, that's positive, but forward is minus 8%. So there's some weakening there in Meta earnings. The PE range has moderated. It's well below 100% now. 73% current and forward 8. Well, forward is going up. See, that reflects earning weakness. So Meta has got weakening earnings. Let's go and take a look at the stock chart. Might look messy. So the Meta bear market is in full swing. Its first objective was 590, was achieved here when it fell here. It's now undergoing a bounce to 673. The second objective for the bear market is here at 490, which I expect to be achieved because it is weak and earnings are weak. And then we got the third objective, which is 395. Now that's going to be an epic drop from nearly 800. That's a 50% drop. That's a pretty severe drop. And I sold most of my Meta. Well, I did sell most of it on a pump to 800. I accumulated some back here, not much, and I've just trimmed a slight amount because I do expect it to keep trading down it's going to go below 500, and there's a good chance it's going to go below 400 because it has got weakening earnings. So this is let's see if I can draw. So it's going to go like that, then that, then that, then that, then that. So that's roughly the pattern into probably October. So far it's following it, unlike say some of the other stocks, is following the bear market pattern pretty close. And this video is a mere fraction of my extensive analysis that is first made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $9 per month, which is nothing compared to what you get access to. I try to do best by my patrons. Folk only need to go read my articles open to the public and the literal thousands of comments under them. Look at this one, 2200, nearly 2300 comments under this article, which shows the level of engagement with patrons. Keep calm and carry on buying AI tech stocks as they deviate from their highs. Where the greater the deviation, then the greater the buying opportunity presented. Keep calm and carry on buying. Quantum AI tech stocks. Access to my latest mega analysis, a comprehensive 3-part guide on how to really get rich during 2020. That has exclusively been made available to patrons right now. You can go and read the 3 guides right now, full access, which is a truly epic piece of work that took me the whole of 2023 to write, which condenses down my lifetime knowledge and experience down to some 60 chapters, which is on top of my ongoing analysis and trend forecasts that are made available to patrons for just $1 per month. There are no bolt-on extras, no courses, no the crap that all these con merchants do. You get full access to everything. So, did you buy the October 22 bloodbath, especially in tech stocks, fangs, with the likes of Meta plunging below $100? Well, I and my patrons did. Go read my articles and the comments posted under them. We got well blooded by catching all those falling knives. Did you make the mistake of listening to the likes of Clown Kramer on the Cartoon Network, who stated Meta, amongst others, was finished? Meta finished at $100 a share. It was the mother of all buying opportunities. This clown stated it was finished. Says it all about Clown Kramer and the Cartoon Network.
They're finished. They're finished as places.
They're finished. They're finished as
places to invest.
We keep talking about this falling knife as if the knife continues to fall. Though there are people who look at this and say,
look, I'm looking at the money coming out. Where's the money coming from to buy to buy industrials? It certainly isn't coming from new people saying, "Wow, it's time to put money in the stock market," because they get such a great rate on the 2-year. I think it's money coming rotating out of companies that have dominated this market for the last decade and into companies like Caterpillar who actually know what the hell they're doing.
Are you thinking that the tech companies that I think that you're disappointed in are going to get religion, if you will, and get disciplined? And what does discipline look like?
You know what they are? I would call them atheists. They believe in nothing.
That's a nihilist.
Meta? I don't know. I think they have to change the name again. They really do. I mean, you can't be saying Meta. I don't know. How about loser? How about Stuputa? I don't know. Anything doesn't even matter. I don't know if they can make a comeback. The facts have changed, and I have to change with it. I believed. I thought I'd be safe. I was wrong. Bottom line, forget being leaders. Big stocks are now followers in a post-COVID era, where we're learning that their earnings were far more inflated by the pandemic than we knew. We're just now discovering that tech emperors have no clothes, if they're even emperors at all.
So at least give it a try. Read the comments, see the depth of analysis. You won't be sorry because I do my best by my patrons. Go that extra mile. Gaining access to over 35 years experience. Right from before the 1987 crash, straight through to this stock's bear market. That we ride the quantum AI megatrend into the future.